Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate Business Podcast for Wednesday, March 22nd, the actual second official day of spring here in 2023. My name is Harry Glantz. Joining us on the podcast today, one of the top loan originators on the Google of our office here at Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation. Equal Housing Lender 2289 is our NMLS number. Is Lisa Lawson. Good morning, Lisa.
Morning, everybody.
Good morning, Lisa. And with us, Lisa brings special guest. He is no stranger to the Hardcore Mortgage Real Estate Business Podcast, as well as the Hardcore Mortgage and Real Estate Business radio show, heard every Saturday morning from 9 to 10 on 97.1 FM here in Metropolitan Detroit. Mr. Matt Bush. Good morning, Matt.
Hey, Harry. Thanks for having me again.
Yep, Matt, it's always a pleasure. Always great stuff from you, Matt. Absolutely, positively the best real estate agent, RE/MAX First St. Clair Shores. For all those people that don't know where St. Clair Shores, Michigan is, it's on kind of the east side of metropolitan Detroit in Wayne County, correct, Matt?
I'm just north. I'm in Macomb County.
All right, there
on
you
the
go.
Other side of 8 Mile.
See that? The other side of 8 Mile, which means if you know where 8 Mile or Baseline Drive is in metropolitan Detroit, north on that side of town will be Macomb County, south is Wayne County in our area to Oakland, and south is Wayne. And going all the way out to the west side, you would have Livingston County. But in any event, Matt, thank you for being on the show. You're always a great source of information and education. And Matt, I'm going to throw this at you first, right off the bat. So much misinformation. There's housing reports out there, and I just showed everybody pre-show that there are two articles out there, totally divergent articles. One says the housing market's strong, the other says the housing market's weak. It's certainly, in my opinion, there's a phrase out there, housing strong, media wrong. Matt Bush, what do you have to say about that? Because there are reports of declining market, but that's just not true overall in our area, correct, Matt?
Yeah, and I mean, to your point, I can go to the casino and I can bet red and black on blackjack or on the roulette wheel, and I'm going to be right, correct? So the more I put out there, eventually I'm going to get right. So real estate is not a monolith. I think that's kind of one of my phrases. If you go, I've got a lot of investors that call me and they're talking, should I invest in Detroit or Atlanta or Phoenix or Austin? And there are some markets that are really hot and some that are in real regression. We've seen what's happened in the Bay Area of late. If you're following what's going on in the Southwest, that area is retracting a little bit, as is like Austin. There are areas where people were moving in 2020, in 2021, where people were building to keep up with demand. And now people aren't moving there as quickly. So builders are not building as fast and demand is shortening. I get those same TikToks and Instagram reels from my friends who are like, hey man, I'm going to wait a little bit because I'm seeing this on TikTok from this person who's doing a well-produced video that says, hold off 6 more months because the market's going to crash. And I said, all right, cool. Well, here are the stats for me. The guy said, hey, one of them specifically, he said, if you look in subdivisions, they're not building houses anymore and they're just sitting flat. And later that day, I was walking a subdivision in Bruce Township and I sent him a video of like 4 houses where people were working on and other people were living in. And I'm like, listen, guy, just because it's happening in Atlanta or in Florida doesn't mean that's happening here. We have a completely antithetical market of all of the anecdotes that you're going to see on the news. So, read. That's good to be following the news, but that's national. You got to find out your local news too.
Yeah, I would tell you, Matt, that we've been preaching that. If you go back and you go to previous podcasts and you watch previous shows that we've done on Saturday morning, we've gone ahead and said exactly that. And Lisa, Matt refers TikTok and everything. There are certain places to get your news from experts, and there are certain places that are there for entertainment. TikTok, Lisa, is just for entertainment. I don't know how that one person every week fits 20,000 bags of groceries into that little drawer on TikTok that they do, Lisa. I don't know how it's done. I don't think it can be done. But anyways, Lisa, Matt brings up a great point. We still have low inventory here. Prices are stable, if not higher. multiple offers, and Matt will attest to this, multiple offers and acceptances over list price. We've been saying that for the last 2 months or so. So, Lisa, I'm telling you, what are you experiencing right this second?
Yeah, for the last couple of months, we kept telling people the time was now, the time was now. We had that unique little pocket where, you wouldn't necessarily have to go over asking. In January and the beginning of February, things were a little bit more balanced. But of course, with the news of spring and the first semi-warm day at the end of, that, one-off warm day in February, all of a sudden people get the bug and now they're moving. And we warned you and we said, if you wait 2 weeks, you're going to be too late. And sure enough, we're in the same situation, maybe not quite as severe as it was last summer, but definitely multiple offers. Usually, you have to make a very strong offer, slightly over asking. I haven't really seen a lot of appraisal guarantees yet, but I'm sure that's just around the corner, as the market moves on and as we move forward. So unfortunately for, like, Matt said, the person who said, oh, I'm going to wait 6 months. Well, this is probably the guy who in 2020 said he was going to wait a year and then was going to say in 21 he was going to wait a year, and then in 22 was going to wait a year because he's waiting for the market to crash. Well, keep waiting, dude. It's not going to happen. You're just pricing yourself out of a market. You're losing out on opportunities. So unfortunately, we talk about TikTok and everybody else and listening to your peers. You have to think for yourself and find the facts and make an educated decision for yourself, regardless of what the market is doing or what might be happening in 6 months from now. If you're paying rent, you are throwing your money away. I don't care if it's now, a year from now, or last year. It's always better to own than rent. So, if people don't want to get on the bandwagon and buy a house because of the crash, they think they've been wasting money all these years.
Yeah, Matt, before I get back to you, I want to introduce who just joined us, Becky Alley. Becky Alley, top 1% of all mortgage originators in the United States. Good morning, Becky.
Hey, sorry, I was at a meeting and I'm here now. Hooray.
Happy Wednesday and happy really official. I want to say it's the 3rd day of spring because Monday was the official 1st day of spring. So happy springtime. And Matt, I'm going to go back to you. So here's the story of what we're seeing right now. So for the past 2 months, as Lisa just mentioned, we talked about people that are waiting. I'm waiting to see what happens. I'm waiting to see what happens. Well, here's the story. If for the past 2 months in the dead of winter, we've seen low inventory, multiple offers, what's going to happen come April, May, and June, Matt?
Yeah, I mean, I hope we're going to get more buyers out there, but honestly, I'm looking for more sellers because our biggest concern, our biggest bottleneck is the people that they want to put their house on the market, but they don't want to be buyers because they know, they the moment they sell their house, they're going to see a line out the door and they're like, well, we don't want to join that line. So like, we know where we're at. We probably refinanced in between 20 and 22 because we had a good agent like Lisa who called that, hey, rates have never been lower, time to refinance. And, even if I find a house that's slightly more affordable or it's only 1 floor, well, now I'm going from a 3 to a 6. And is it really that much work? Is it that much better to roll all my equity and keep it all the same? Why would I move just to be on a 1 floor to do all that stuff? And I'm content where I'm at. So that's the bottleneck we're seeing is there's just a lack of sellers. The prices are going to be the same. We waited. I'm just pulling up the metrics from last year to this year. Like you said, the average sale price, the median sale price are at the same, if not higher. The only thing that's different is the interest rate. So you might have thought last February, hey, I'll wait till, the interest rates come down and the prices come down with, or the interest rate goes up and the prices come down with them. That hasn't happened. And it's been a year now. And I'm spending the same amount. But the thing is I'm eligible to borrow less. And my payments are more because my interest rates now, in the 5.9s or 6.2s as opposed to the 3.1s 3 years ago when I should have done this. So, I was on a mountaintop screaming back then. Now it was time to trade up. And that's what it was. So everybody traded up, everyone listened to us, and now we got to coach people out. I feel like we got to get those hermit crabs out of their shells and be like, all right, let's get this going.
So Matt, I'm kind of on the common sense / economic mountaintop right now. And Becky, I want to go to you on this. So if I'm standing on the common sense economic mountaintop and it's telling me that there, yes, as Matt said, he's looking for more sellers, which means there's a lack of inventory. We've seen the last 2 months, a lot of buyers. We have so many pre-approvals out there right now that even if all the homes that came on, we're never going to see all the homes come on the market for all the pre-approvals and buyers are out there. This is shaping up on the common sense economic mountaintop that I live on, shaping up to be a strong home buying year. Okay? If that's the case, and we're seeing signs of that right now, why are people waiting? It makes no sense. There's just going to be more competition coming into the market in April, May, and June with buyers because all those, you're not going to have enough sellers, Becky.
Yeah, I mean, that's how you win a rap battle. Okay, when you already know what everyone is going to say, they can't really object anything because you already hit them with it. I had a conversation with a first-time home buyer. I think I'm going to wait because it's going a little bit too fast and I'm nervous. I think I'm going to wait. And I said, okay, well, what are we waiting for? Are we waiting for the home prices to go up? Are we waiting for more competition to enter the market? Are we waiting for this moment in time that's not going to happen with the prices coming down because now there is more competition? I'm like, what truly are we waiting for? Let's figure that out so that way we can really decide, does it make sense for you to wait? Because you have the down payment, you can afford the payment, you're renting right now, you're not building your own equity. So what are we waiting for? Because I go, the deeper you get into this year, the more competition is going to be out there. We are losing our window very, very quickly as far as what's going to take to get these buyers out there that, are going to be to get these more accepted offers. And they're already feeling that fatigue already. So but we've been through this, and that's why we're able to respond and not react to this market. We already know this was going to happen. We're already seeing it. We've been through this in 2020, 2021. Then of 2022 got a little bit, dicey because of the interest rates, but people are not backing off. And if you're a buyer, like Lisa was kind of mentioning, the investors are understanding. You have people that are now retaining their current home and they're trying to build their real estate portfolio and become investors themselves because everyone is understanding via TikTok, okay, that there is wealth to build in real estate and everyone wants to be an investor, and that is the fact. So you have to identify that the time to buy is when it works for you, but don't get scared because you threw your hat in the ring a couple times and got beat out. Everything that is worth something is worth fighting for. And if it is for your future and you no longer have to move, you no longer have to listen to the people river dancing above you or whatever is happening, you need to make sure that you are locking into yourself in your future.
Yeah, so I'm not so sure TikTok's made the world better. Now, cell phones have made the world better.
Everyone is, they know what they're doing because of TikTok.
Because TikTok, I mean, you got to be kidding me. Lisa Lawson, I think we got to kind of pump the brakes on the waiting, and more inventory is going to come on the market, and it's just not going to happen. And again, the common sense mountaintop that I live on, it's kind of like 2021 all over again in the home buying market, because forget about the interest rates. There just wasn't enough inventory. And I'm seeing that's what's going to happen too. We have thousands. When I say thousands, I mean tens of thousands of pre-approvals nationwide, company-wide out there in the market right now, Lisa.
Yeah.
It's the demand. And if we take a microcosm of that, and we're just a little microcosm of what we've got going on, just Lisa, boil it down to what you have and how many pre-approvals that you have issued this winter time compared to actual offers that got accepted.
I couldn't even tell you those numbers. I'm sorry. I mean, it's been crazy. I have somebody right now, I think they're on their 5th or 6th offer, and they just really started looking about 3.5 weeks ago. So, and they're being very aggressive because they need to move. Usually people aren't probably making more than one offer a week, and they still haven't had one accepted. So, yes, it may have slowed down a little bit over the winter, but I said it's ticking up very, very fast. And the reality is you have to invest in yourself. People say, I spoke to somebody that I talked to just over 2 years ago, because every year they're reevaluating, is this the year? And I finally crunched the numbers. I'm like, you're paying $1,550 a month in rent. In 24 months, that's $37,200 that you have thrown away and paid somebody else's mortgage. You could have invested that $37,200 in yourself. I said, what are you waiting? Like I said, what are you waiting for? And when I said it like that, they're like, oh, I guess I didn't really think about it like that. again, you have the money, you're ready. We've been talking about this for 2 years. You've taken the first time homebuyers education class, even though you didn't have to because you wanted the education. You know what to expect in trying to really drill down. And sometimes I think it's fear. People are fear of change. You know, maybe that's why they're not pulling the trigger, especially for some of these first time homebuyers. But now is the time to take advantage. If you already haven't done it the past couple of years and you missed out on those opportunities, don't miss out on another opportunity this year, because prices are still going to go up, rates are still going to go up, and you're going to be standing on the sidelines, except your rent's going to be $1,800 now instead of $1,550 when they go to renew it. So, you know, I think you have to make opportunity, and sometimes opportunity presents yourself and you just have to be bold enough to take it and move forward. And I think there's a lot of, you know, media scare tactics that have kind of frozen people into just staying where they're at and not doing anything. And that's not growth.
Well, that's what you bring up, the key word in the whole thing. What's driving the economy right now, what's driving interest rates right now, is fear. And Matt Bush, right now, what we're seeing in the Federal Reserve, and I'm going to tell you this right now, and this happens to be a factual statement. All right, people are not buying homes right now that are on the fence. They are afraid because they are looking at what they perceive as a huge increase in rates, that they won't be able to afford the home. Well, first of all, I'm going to tell you why that's not true. Rates were 17, 18% in the Grandma Alley days back in the early 80s, okay? And people still bought homes. And look, we've come through it now 45 years later. All right. The things are always going to happen. But and having a conversation with a few friends of mine on a roundtable discussion yesterday at an economic forum, real estate is always the safest and best way for investment, for wealth building. It's tried and true over time. Can it get cyclical? Yes. I was with a big developer. When I say a big developer who he and his family have developed over the last 60 years in metropolitan Detroit. Okay, real estate, it always leads you out of whatever fear and recessionary period that you have. So Matt Bush, with that little lecture that I just gave, tell me about what's going on in your area, your world, what you're doing right now to go ahead. You're beating the bushes, you're on the streets. What's going on in your world?
Yeah, so I mean, I have about 10 clients that are looking to buy a house right now. So I mean, I've cultivated a pretty good sphere to where I'm just kind of like touching my base, you know, weekly, if not monthly, just to check in with a lot of them. You know, my thing to them is saying, hey, yeah, the rates are at 6.5%, but you know they'll never go up if we close today. You know, if we pull the trigger, they're going to stay here. You know, if we wait 6 months, a year, we don't know where they're going to be. And if they come down, we can refinance. A lot of banks are still offering the buy down programs that are paid through seller concessions, and sellers know this. And it's been my tactic since, you know, 2020 hit. I follow the 7-day rule. For first time home buyers, especially FHA people, we're not showing a house until it's been on the market for 7 days. I'm not getting into the bidding wars, and I set people up for success. You know, it's super crucial that I meet with my buyers before we go out in my office. I'm not meeting you out in the field. We're sitting in my office. I'm going over the process. I'm introducing you to Lisa to understand what the process is. So when we're out there, we know the steps and how to be successful. I'm not meeting people at property anymore, trying to see if they're, you know, feeling it. And if they're not even approved yet, you know, who you work with matters so much more today from the real estate professional than the people who did an overnight course and joined in 2020 because their friend was making easy money, or so they thought. So they took an online course and passed a random test, and now they think they can do it. So they're just meeting people at vacant structures or crazy houses and ended up in the next series of murder mysteries of whodunit. So, you know, and then it's crucial for us too, on the other side, to know who we're working with, who we're qualifying, to show that they're a qualified buyer, a qualified seller on their side, so we can direct our time to who's really worth working for, because it's that top tier of 1 to 5% of agents and lenders who get like 90% of the business, because We know who we're working with. We know the co-op agent, the co-op lenders we can trust. And that's who's making the business work and who's moving the market forward.
Well, that's a big key. You have to have your team set. You have to go to the right people. Like you said, you can't be in the, real estate mortgages was business du jour. It was the career to be in 2019, 2021. Certainly, we've seen a lot of attrition in 22. There'll be more in 23. But on a brighter note, Becky Alley, so busy, so much going on, so much positive vibes out in the market. And I'm telling you, with spring now here, I'm going to start dressing in my lighter colors because I got to bring the sunshine out.
Yeah.
There's a lot of positivity going on right now in this market.
Yeah. Listen, if you're focusing on negative, you're going to see negative. And when you focus on positive, you're going to see positive. We had 6 of our buyers get accepted just yesterday, another 2 today. There's another 5 over the weekend. The point is that when you put out that good energy, it's going to come to you. And just because your offer didn't get accepted on the first 5, well, that house probably wasn't for you. And that's fine. You just kind of have to, change that perspective, raise your gaze, and get in line with the right people, because the right conversations and the right real estate agents working side by side, shoulder to shoulder, we are literally leading our buyers to success and getting these offers accepted, multiple offer situations. And they're not even having to go that much over asking, because sometimes we talk about this all the time. Who is on the other end of that pre-approval and the conversations that you're having matters. It really, truly matters, because if someone is working 9 to 5 and you can't reach them and you need to know what their financing is, that's going to be the difference between you getting accepted and not getting accepted. Sometimes sellers are driving the ship and they want cash, and there could be a buyer that's exceeding all expectations, but they think cash is a quick close. I need to say this as a PSA. Any sellers are out there listening, cash is not always a quick close. Sometimes it's at least 2 weeks. You can close a financing deal giving you more money in 2 weeks. We just closed one in 6 business days. So cash is not always king. So buyers and sellers, do not be discouraged if there's multiple cash offers, because I feel like there's a skewed perception that cash is easy when sometimes it is not. And you can get more money with financing with the right lenders.
Yep. This is the Hardcore Mortgage Real Estate Business Podcast, Wednesday, March 22nd, 2023. We have our esteemed panel, Lisa Lawson, Becky Alley. We're joined by our special guest, Matt Bush, RE/MAX First in St. Clair Shores, Macomb County, Michigan, Hot County. Panel, I'm going to go around. I want to get last words in. We're running up against our time frame here on the podcast. Lisa, I'm going to start with you. I'm going to go to Matt and then wrap it up with Becky, and I'll say my little 2 cents about what the Federal Reserve is going to do today and tomorrow. But Lisa Lawson, what say you for the last words of the day for March 22nd, 2023?
Yeah, don't let fear rule. I mean, some people don't make the call because they think their credit isn't good enough. Some people don't make the call because they don't have enough money, so they think. Let us help you come up with the solutions. That's what we're here for. We can help improve credit scores. We can help come up with other alternatives to the down payment that you might be lacking with down payment assistance. There's so many other things that we can do to help you move forward. Just don't be fearful, make the call, and let us help you get into the home of your dreams.
Excellent. Perfect. Matt Bush, RE/MAX First, St. Clair Shores.
So 97.1, our radio station, has a stat of the day from 6 to 10 on their show, and I'm going to bring some stats of the day today. So it was a year ago this month that the Fed started raising rates. And that's when people started getting, kind of shaky about the market. So from last February to this February, when there was rates at 3s to rates at 6s, the only thing that's gone down are new listings, down 22% in Macomb County. The median sales price has gone up 14% in that same time. So if you want to wait for another 20% of the market to close off and another 14% of the rate to go up, hey, call me in 12 months when the rate's at 8.5 to 9, right? But let's lock that rate in at 6, get your rate buy down to 5, maybe the high 4s if we're really crazy, and do what's right for you today. Because your landlord's going to come knocking and telling you the rent's going to go up 10 to 15%, or you can invest in yourself and lock in that rate for the next 30 years.
Excellent advice, Matt. Becky Alley, last words of the day.
Yes, I had a really exciting day yesterday. I went and spoke at a couple real estate offices, and Really, the reality is that people are recognizing that the time to buy is right now. And, with the lack of inventory, we have a supply and demand issue. That's going to be the thing. We've already knew this was going to happen. So here we are. So if you're thinking about getting out of your current rental situation, or if you're looking at retaining your current property and leveraging that for your real estate portfolio to then in turn buy again, make sure you're having the right conversations as soon as possible. It is going to get a little bit crazier over the next couple weeks, especially if the rates move down in any kind of inkling. It's also going to push another flood of buyers out there with the lack of inventory. So it's more important now than ever that you know what your maximum is, you know what your minimum is. We know what boxes we can check, and we can get you in line with the right people, so your offer does stand out when you're ready to make that move.
Yeah, excellent advice, Becky. And I too had the honor of being at a real estate developer roundtable, and we were talking about the whole thing and the whole thing going on right now is, what is the Federal Reserve going to do? And there's an article out, the banking meltdown may have done the Fed's work for it. Well, there's this perceived, in my opinion, it's just one man's opinion, this perceived banking meltdown going on. You've got a couple banks here and there. So now what's happening is the whole banking sector is going to try to overcorrect and overregulate again. It always happens when something bad happens. They always look to react. Now, what happened with the Fed? So in 2020, the Fed overreacted and then started the easing and brought interest rates down to 0. And mortgage rates fell on 15s into the 2.5%, 3% range on 30-year fixed. Let me tell you, everybody, while we loved it in the industry, it was too much, too fast. Now the opposite is happening. And as Matt said, the Fed has raised rates 8 times since February, March of last year. They're looking at a 9th time. What do I think they should do, and what are they going to do? Well, I think if they had any guts at all, they wouldn't do anything. And if they really wanted to inspire and boost confidence, they would go a 25 to 50 basis point cut. But they're not going to do that. So what they're going to do is they're going to take the safe way out today, and they're going to cut by, you ready? They were going to go ahead. I'm sorry, I meant raise. They were going to raise 50 basis points because they have this weird plan in their head that raising rates too fast is going to create and correct a problem that they had by lowering everything too fast. All it's doing is, if you're in a car and you're jerking the car back and forth to keep it on the road, sooner or later, you're going to jerk that steering wheel and you're going to go off the road. So they're not going to do 50 basis points. They're going to blame it on the banking crisis. They're going to take the safe way out and go 25 basis points today when they really should go 0 or cut it by 25 to 50, which is not going to happen. That's my opinion. Those are my words for the day. My opinion also is stability is the key. You can't keep rocking that car back and forth, or else it's going to flip over and go over the side of the road. Anybody who's driven fast like I have my whole life knows that to be true. But anyways, this is Harry Glantz for Becky Alley, Matt Bush, Lisa Lawson, Hardcore Mortgage Real Estate Business Podcast. It's going to be a great home buying season. It already has all the makings of that, and that was in February, and now the end of March. Everybody, we look forward to seeing you soon. We'll be on the show, the Hardcore Mortgage Real Estate Business Show, this Saturday from 9 to 10, 97.1 FM. Keep it tuned in, and we'll see you soon.